Hey everybody, this is Rudy from BesterInvestor. By now, if you've been following some of my videos, you'll know that most of the time I'm trying to find some undervalued stocks that are interesting for a variety of different reasons. And to date, I've looked at a few of them in terms of analyzing some of the goings on. And my favorite in terms of the discussion was Occidental, with its issue of warrants and the sort of discussion as to whether the company is going to survive or not. But then, my Twitter feed kind of blew up on a company called GSX. I knew nothing about GSX. It's the ticker symbol for a company called GSXEdutech Inc., which is a Chinese company listed on the New York Stock Exchange. And the big question is this a scam? Is it like an Enron type debacle? Or is it going to be in the future? Or is it an investment opportunity of note? So I thought we could take a look and sort of see what's going on with GSX. First and foremost, it's important to remind you that my videos are not investment advice. In fact, I've warned you several times, if you follow my advice, you're going to lose all your money. So view the information I share with you as entertainment and information, but no more than that. And feel free to comment and tell me what you think in the comment section below the video. So let's take a look at GSX. So this little paragraph, which is probably too long, looks like a lawyer wrote it, is from their website. It's an overview of the company. It's sort of the traditional about us kind of thing. I look at this and I say, okay, what's going on here? What is this company all about? And the opening line says it's a technology-driven education company and leading online K-12 large class after-school tutoring service provider in China. So immediately I kind of go, okay, coronavirus on one hand, online tutoring on the other hand, like these two things kind of connect. They if you're bridging the gap between kids not going to school because of COVID-19 and you're providing tutoring online, yeah, it's probably a good thing. It's sounds okay, sort of at face value. Then it says GSX adopts an online large class format to deliver its courses. The company believes it's the most effective and scalable model. Kind of makes sense, So at this point in time, I'm still trying to be objective and see what GSX is all about. So that's according to the company's website. Then I found this Muddy Waters Research. So now I'm getting interested, right? So this pie chart that they created over here, this dark gray section on the pie chart, it says high confidence bots, 73%. Highly likely bots, 7.6%. Somewhat real, 20%. So we're like, okay, what is going on here? What is Muddy Waters getting their knickers in a knot for about GSX? So let's take a look. So Muddy Waters says, we are short GSX because we conclude it is a near total fraud. I'm not putting the check mark there because I'm agreeing with them. I'm just highlighting where I'm reading. We conclude that at least 70% of its users are fake. Our conclusions are based on GSX's own user and attendance data files. We downloaded data, it says here, from more than 200 paid K-12 classes covering 54,065 unique users. In addition, a former GSX manager corroborated our analysis and explained various details of GSX's extensive bot operation. So, at this point in time, the objective me goes, former GSX manager, is this like a whistleblower who's telling you good information, or is it just a disgruntled ex-employee? I'm not sure, right? So I'm still kind of being objective to GSX because I'm not entirely sure. I don't know what's going on here. So then I go to my Twitter feed, right? So now I look at my Twitter, and I'm reasonably active on Twitter. So and some of these people like some of the tweets that I shared about something completely different, but then I find this sort of in the comment section below. So this first guy over here, Lumilaws, says, the most manipulated of all of the China fraud, I'm reading this tweet over here right now, GSX, bought puts to add short delta to portfolio, don't want to fight the crooks at the Fed, via S&P. We'll see if the SEC does something in tomorrow's meeting with some credibility. This was on July the 8th. Citron Research down here. It's a reputable research company. GSX is the only large cap stock in 20 years that has allegedly grown revenue over 350% a year and profitable during growth. No other company has accomplished this feat since early Google. Are the numbers to be trusted or are they a fraud? So they conducted a little poll and they say, trusted, GSX would not lie, 20%, GSX is a fraud, 80%. Joseph White, this guy over here, 45 SEC letters to delist GSX, 958 US-China petitions to delist GSX, letter to the SEC with reference to 12 short reports. Muddy waters we looked at just a minute ago. It's like, okay, what is going on here? This is from the Standard. Loss-making Chinese firm GSXEdutech branded a fraud. So the text down here at the bottom is really small, so I'll just read it for you. It says, after Luckin Coffee, U.S. short seller Muddy Waters is targeting New York-listed Chinese online educator GSXEdutech, saying the business was a near total fraud, Forbes reported. So, what does it mean if you're short? How does this work? So I thought I'll just drop this in quickly just to explain this. So effectively, what happens when you're short selling is short sellers are borrowing shares of a stock that they do not own. And they typically borrow this from the broker's street account. And then they sell those shares at the current market price. So if we look at something like GSX, it's currently trading at around almost $90 or so. So what you're doing is you're borrowing the stock to sell it at the current price and then hoping it's going to crash. So you're hoping to rebuy those shares that you need to deliver at a lower price in the future and then return the borrowed shares to the lender. So if I took the borrowed shares and sold them for $90 and the stock crashed to, let's say, $40, then I make $50 a share, and then I can buy them back at $40 and give them back to the broker that I lent them from. So basically, short sellers, in very simplistic terms, are betting that the stock that they are selling will drop in the future. So in other words, someone who's shorting a stock is hoping that the stock will drop and go lower in value in the future. That's sort of what short selling is. Very brief and simple. It's not too overly complicated. Short selling, by the way, is the opposite of long. So if you're long on a share, that means you own it. And if you're shorting it, that means you're selling the borrowed shares, hoping that the stock will drop. So here's some news stories, right? So it says Chinese stocks have been on fire in the past month. The iShares China ETF Index FXI more than doubling the return of the S&P 500 in the same time. But according to a new report by S3 Partners agent Dusanowski, he's basically saying these short sellers are taking advantage of the bullish momentum to increase their bets against US listed China stocks, and there's currently about $40 billion in short interest among US traded China stocks. And then he listed three here at the bottom, the three largest ones. So Alibaba is obviously the biggest one, so Baba. If you don't know what an ADR is, by the way, ADR means an American Depository Receipt. That's usually, you get the ADRs issued to you if a company is traded on a foreign stock exchange. So it's the equivalent or near equivalent of the share that's traded on a different exchange. That's an American Depository Receipt. So ADR, Baba, has the largest short interest of any US listed China stock at $10 billion. Then right beneath that, it talks about Pinduoduo, which is also an ADR PDD, a distant second at around $4 billion, and then you have GDX at around $2.6 billion. Okay, so that's quite a massive short on GDX, or GSX, sorry, let's see what GSX is all about. Here's the balance sheet. It's, at a glance, it's not too bad, you've got $3.3 billion worth of assets. You've got approximately $1.5 billion worth of owner's equity. It's not a bad looking balance sheet, sort of at face value. The liabilities and the owner's equity is about half and half of the asset value. That's okay. It's also interesting to note about half of the assets are cash or cash equivalents. So cash or accounts payable, accounts receivable due to them, etc. And then it says Barclays has just downgraded GSXTech Edu from overweight to equal weight. But then we look at the stock over here. It's like GSX 52-week high, $92, 52-week low, $9. Of course, it's going to attract attention. Maybe not always for the right reason, but like there's got to be some reason why GSX went from $9 to $90, like 10x, in 1 year. But anyway, remember that the owner's equity is about $1.5, $1.6 billion or thereabout. Then we look at the market. So this is a snapshot I just took from my TD Ameritrade account. So I just said the owner's equity according to the balance sheet is about 1.5, 1.6 billion. But the market cap, so the market is valuing this company at like almost $18 billion. What else is going on here? Trading in a fairly narrow range, $70, $73, $75 or whatever. $7 million in terms of average volume. It's trading sort of near an all-time high, 80% volatile, PE ratio of 408, price earnings, no dividend. I don't like stocks that don't pay a dividend. In my previous video, I talked a little bit about FIRE, F-I-R-E. I want financial independence and retirement early. So, FIRE is something I subscribe to. So anything that doesn't have dividend is less attractive to me almost automatically because I like the dividend as a little hedge. It's 10% held by institutions. And there's the short interest that we talked about just a minute ago. So 14.5% of all the outstanding shares. So the outstanding shares are at the top over here on the right-hand side. Shares outstanding, 238 million shares are outstanding, and about 14.5% of that is short. People are betting that the stock's going to go down. As usual, you can find me on LinkedIn at Rudy Bester. I'm on Twitter and Parler at Rudy Best. You're welcome to email me at rudy@memorytrees.co. Memory Trees is our family's charitable foundation and affiliated with MTC Equity Partners, which is an opportunity zone fund that invests in distressed assets in lower income communities or designated opportunity zones. So you can chat with me that way. If you like this video, please give me a thumbs up. I'd appreciate it. And if you like what I'm doing, then feel free to subscribe so we can build a bit of a community of people who are like-minded and looking to get something that you can invest in for the long term to build some generational wealth. Anyway, that's how you can get a hold of me. What I'd really like is your comments on GSX. Is it a scam? Is it a fraud? Is it the next best thing? Is it going to go from $90 to $900, kind of like Tesla or something? Or is it going from $90 to a buck or two before it files for bankruptcy? I'm not sure. It's very, very tough always to tell. And the thing that makes it even more difficult is the fact that it's a Chinese company traded on an American exchange, and you don't necessarily have the same transparency that you have with US companies. So I'm not making a judgment call here. I'm effectively indifferent. GSX could go, as I said, from $90 to $1,000, or it could go from $90 to zero. What do you think? Let me know in the comments. Anyway, I look forward to connecting, and look forward to seeing you guys next time when I uncover something next that I think would be of interest for us. This is Rudy for BesterInvestor signing off. Bye-bye.